Good morning, traders. Man, oh man, it is Saturday. I want to go over the price action that we had this week. I think we saw a return of normal price delivery this week. We haven't seen it in so long, I was scared to take it. But we saw it, man. It was good. It was a beautiful thing. So, NVIDIA earnings come out, and everybody's talking about what a wonderful thing NVIDIA is. And last time NVIDIA came out, the market just went up all day long, would not come down. And, oh yeah, it's NVIDIA, whatever. Same situation. If the earnings come out, we just start flying up. But look at this on NQ. NQ was the driver, definitely the driver. ES didn't even take its high, its 4-hour high. This was the driver on the big day, okay? And look where it went to. This is a fair value gap on the daily chart. This is a regular trading hour high. This is a daily high. We didn't want it, but we wanted that 4-hour regular trading hour high. And so, yeah, NVIDIA is the most wonderful company in the world. They're gonna, one stock is gonna drive the entire market 500 points higher. That one stock. But then once it gets to this 4-hour regular trading hour high, and this sell side fair value gap on the daily chart, NVIDIA no longer matters. It sucks now. And the market falls. How many points did it fall that day? I mean, it just absolutely freaking fell out of bed. And we're only 130. There's the end right there. I could barely even fit it on my chart. Let's see here. From the very tippy high to the very tippy low, it's right here, right there. 1,222 points we fell that day. 1,222 points. Well, I may be a little off. Let's just say 1,200, okay? So that's a very clear example of how the market is rigged. The news is used to move price where big money wants it to go, and then it goes where the next logical level, okay? So I've been saying bearish all week. That's the seasonal tendency. We have not been bearish. We've been just straight bullish. But I was predicting that now that the government is back in session, we should start seeing normal algorithmic movement again, where we take the highs and we take the lows. And that's what we did this week. We took the highs and we took the lows. I had no idea we were going to take that low all in one day, but we did. If you look at the extended hours, we ended up coming all the way down to here and overnight, and that's the overnight low right there. And we took that low right there. The next day, we shifted over. This was the driver. NQ did a little bit of taking of highs and lows that ES did not take, and that was an important indicator that where we were going for the rest of the day. I didn't catch it. I was not really paying attention to that. I just noticed that it was odd. This is on a 15-minute chart, which we could put this one on a 15-minute chart too, just to get the idea of what went on in the morning session. So here, right here, NQ, I had the pre-market high marked out on here, but NQ took its pre-market high. I might as well mark that out so we can understand what I'm talking about here. Okay, so extended hours, 8:30, 8:15, 8:30. That's the pre-market high right there. It's not very far off. So it only took it by a tick. But let's mark it right there. All right, so there's the pre-market high, there's the pre-market low. NQ took it by a tick right there. Same candle, ES leaves relative equal highs. It may have taken that candle, but it did not take the pre-market high. And then we chopped and chopped down, down, down. And I thought it might take the pre-market low, because that is the New York session, but it didn't. It left it making a higher low with relative equal highs up here on this 15-minute chart, and a pre-market high that had not been taken. I was wanting it to take this. NQ did take its pre-market low, and then we started offering higher. But here's the kicker right here. Regular trading hours only wanted this monthly weekly low right there. Bam, hit it, and that was all she wrote. Higher low, away we went. And where did we go? This is what I'm saying is this was the driver, not this. I mean, you could argue that we were trying for that 4-hour regular trading hour high, but I always put a fib on the daily candles, Monday, Tuesday, Wednesday, Thursday, because on Friday it is not typical that we extend the weekly range. We may dip outside of it a little bit, but for the most part, we stay within that weekly range. Occasionally, if we do extend it, like if there's a big number come out or something like that, it'll only be 25%, and then we'll pull back. So I'll mark those areas out each time. Here's 25% extension of the week on that chart, and here's 25% extension of the week on that one. That's as low as we got overnight. So, and we respected those lows. Over here, this is still on regular trading hours, but that's as low as we got. We did not make it to the 25% extension. So that also is indicating more upside. Okay, so we start trading higher. NQ gets to the 25% retrace of the week and pulls back. ES got above its 25% and pulled back to the 25%. That's when I was thinking, okay, ES is the driver here. And if we pull back and we're going to remain bearish, we're going to stay below the 50% of that week. And look at that. Where did ES stop? Right there. Why couldn't we take that high? Because a computer was told to deliver price to 50% retrace of the week and then pull back. And that's exactly what it did. Look at that. Over here, it left, that's the low of the week. It left this high, didn't take it because ES was the driver. And this was just following suit. Sometimes NQ will be the one that they're keying off of. I think that's what it was on Thursday. And sometimes ES will be the one that the computer is queuing off of. See here, this is the Thursday movement for ES. Why didn't it take that high? Because it was playing off of NQ, taking that high. And then why didn't NQ take its high the next day? Because it was playing off ES going to 50% of the week. And that's how the algorithmic price delivery works. The news, NVIDIA's earnings, all of that stuff, hogwash. They want you to believe it's important, but it's not. It is important in the fact that they're going to make the price move. You need to know that. They're going to make the price move. Well, where are they going to make it move to? It could be a level over here, or it could be a level over here. Just depends on which market the algorithm is using as the driving force of the price. Okay, so definitely the tech stocks with NVIDIA earnings was the driver here. We drove it up to that level. We fell out of bed all the way down to that monthly low from October. Same here. And I've been saying bearish all month. And we hadn't seen it yet, but we started it. We started it. And I think this is where we're headed right here. This downward move is going to continue until we get here. I would like to see it happen relatively quickly by the end of November. Probably not. Maybe. Who knows? If we can have another day like this, it'll get there in one day. But I think it's going to happen. Typically, we need a pullback so we can have a Santa Claus rally, and I expect that to happen. Analysts about mid-year changed their prediction for for ES, where it was going to finish at the end of the year, and they said around 6,400. It may have been 6,425. I'm not sure, but at that point we were already trading above it. So that alone gives you an indication that we got to pull back to it in order to close the year out there. I think we'll pull back to this area. There's also a monthly fair value gap here, 2 of them. And so we could pull even further back into that and then rally back up for the Santa Claus rally, which is, we don't always get it, but it is a seasonal tendency. The month of December, we typically start trading back up, and then we could finish in this area right here. I'm not sure what the prediction was for NQ, but if it follows this path, it's going to come down into this area and then pull back up. You could probably put a fib on a monthly candle and get a pretty good accurate level of where it's going, because it's just delivered by a computer, and that computer is told pull back to the 50% level, and then however much that's probably 25% of the daily range. That would be an interesting thing to look at, wouldn't it? Let's see here. We'll put that on there. From the high of the day to the low of the day, where do we pull back to? Not quite. Yeah, here's 50% of the daily range. We didn't quite settle at 50%. We did 25% retrace of the week and popped up just a little. I wonder what the after hours candles did. Let's see. They just stayed in that range right there. So we touched that 25% retrace of the week. We did not make it back to 50. I would say that's about a 30% retrace from the high. Still could be an algorithmic delivery though. All right, so that encourages me that I can start taking an order at a low, and I can expect it to move to the high. Where we haven't been delivering price this way, if we go all the way back over to the prior week, we weren't delivering price that way. We would go up and leave a high, or we would just rip one direction and then the other. And I believe during that time, we were in an algorithm that was just delivering price based on a range. We have been taking this step down, but like this area, we were just in a range. Taking the 4-hour high, taking the 4-hour low, going back to the 4-hour high. You know, we were just in a range. And some of the daily stuff, if you do a 1 hour, it would look like we were going somewhere, but we weren't. We were in a 1 hour range. Here we're in a 1 hour range. And we would run up, and then we'd just stay in that range. There was one day we were in about a 250 point range that you could see on the 1 hour chart. I think it was this one here. Maybe this one. See if that's small. Over here it looks big. It's 250 points on NASDAQ. And this one here is also a big range. And so I think during this time, during the government time, instead of having an algorithm that was going one way where you could trust a move was going to go up and take a high. It was high resistance for the most part, and it would get into these big ranges that on a 1 minute candle looked like we were really going somewhere. But we would go down and then it'd come right back up and stop you out at break even or a loss, and it was just a dreadful time to trade. So during that time, if you saw money, you better be taking that money or it was going away. And that's the way it stayed that entire time during the government shutdown. We would have occasional days where we could see regular price movement. The rest of the time, no. It was those ranges. And sometimes they were bigger ranges, 4-hour ranges, like that one, 4-hour ranges for a couple of days. The reversal patterns that I normally look for that occur all the time weren't occurring. It would go down and hit a low, hit a high, and just rip away with no reversal pattern whatsoever, no opportunity to enter whatsoever. Very, very difficult time to trade this last 8 weeks. This week, I saw it on every day of the week, even Friday. Normal algorithmic price delivery. Even with this big rundown, that was normal. ES did not take the high, but it wasn't the driver. NQ did. It was the driver. ES did not take its low on Thursday. It did not take this low on Thursday. It took it in the overnight session and then in the New York session, and then we rallied. And NQ was bouncing around down there too. It had already taken October low. ES hadn't. So now ES is the driver. We're going to take that low and then we're going to rally back up to the 50% of the week. And you can see NQ did not even take that high. ES did. All right, so that's that. So if this is not algorithmic price delivery, why wouldn't NVIDIA's wonderful earnings cause the market to continue to go up here? We got a whole inefficiency here. We got a daily high right there. Why would it all of a sudden, the thing that drove the market up 500 points, take that high and fall 1,200 points? Because this is where the market makers wanted it to go. Some people say the market is rigged. I'm telling you, it absolutely is rigged. And you got to figure out how they're rigging it on a daily basis. Most of it will be based on either ES or on NQ. One day they may be queuing the algorithm off of NQ levels and the next day off of ES levels. I started trading ES, number one, because NQ is putting up 80.1 minute candles on a daily basis, or 100.1 minute candles. Yesterday's opening range was first 1 minute candle was 109 points. Crazy big. So NQ, until it calms down, is not going to be something I'm going to trade. ES, I can trade it with one and keep myself out of trouble most of the time. But I really like the reversal patterns we saw this week. I really like, I'd already shut the stream down and I was not trading when this one happened. Yesterday morning, there was one right here, and I want to look at it because ES was putting off the good signals. We double tapped. We double tapped the low, respected this bullish order block right here. So that would be our bullish order block. Poke the low, turn green. Tried it again, failed. Went up. We did not validate the breaker. We tried, but we did not. And I remember watching it to that point, and I said, no, I don't trust any of this price action. I'm done. I had my money, and I got off. Come back down right after I got off and went and started getting ready to go to town, and we made a higher low. That was your ding, ding, ding. Higher low. Then we finally validate the breaker. We did have this fair value gap pushing through the breaker, but it could have still come down and ranged again. So the one that I would expect to get in on, maybe this one here. But we still had these. Maybe you get in at the pre-market high at this fair value gap because we hit it and we didn't pull back. So maybe that's where you get in. But that's a long way from the bottom. If we were going to pull back to the breaker, that's a long way from there. So I don't know where you'd want to try to get in on this. It would have been a nail biter getting in here, because usually when we take the pre-market high, we pull back. So, but that, I believe that was above that opening range candle there too. The first candle of the day is right here. So that would be the opening range 1 minute candle right there that we took with this fair value gap and then respected. So yeah, that would probably be a good place to enter right there at that fair value gap. That would be an important level. Let's mark it. The first 1 minute candle of the day right there. Relative equal highs. There it is. Interesting how that delivered that. Relative equal highs taken with a fair value gap respected. Adios paya. All the way to 50% of the week. Pretty cool. I don't know if I would have survived this pullback because we took that 4-hour high. I actually got in here. There was a decent reversal pattern. I got in here. But I wasn't at home. I wasn't in front of my computer. I was just doing it on my phone. You can't even really see the charts on that sucker. But I looked at it and I was up real nice. And I was expecting us to go back to settlement at that point, but we didn't. We went up to that 50% mark. And I did take another short after we failed to make a new high there. But it was in a trading combine. It wasn't in my real money account. I'd already locked it out. But that's the price delivery that we had on ES. And I think I saw a news report, something like that. Why were we trading back up on this day? Oh, investors have regained confidence in NVIDIA. Yeah, you're just trying to explain what in the world's going on, trying to sound smart. You don't have any clue what drives the market. Or maybe you do, and you're in cahoots, and you're just trying to make it seem like you know what you're trying to make it make sense, so retail guys will keep putting their money in the market, and the market makers can continue to steal it. Maybe that's it. But it's definitely rigged. The market is definitely rigged. And this is how they rig it. And this is how we're going to get rich, all of us. We're going to learn how they rig it. We're going to notice it every day, which one's driving the price action. And I wonder if we could find that same 1 minute candle over here. It had already taken the pre-market high and all that, and just see how it performed around that 1 minute candle range, because it was a giant one. Let's see. I'm going to go back to RTH now. So it'll be easier to see. There it is. First 1 minute candle is there. Pretty high. It didn't just take it and run. So pre-market high, that would be the top of this opening range candle here, the high and the low of this opening range, and we stayed there from the open all the way till we dipped there to settlement, but right back into it, took the pre-market high, right back down. That was dreadful. If you traded in there, I'm sorry. I did get in a trade based on this breaker on the ES, But when we got in this chop right here, I was like, no, screw this. I'm not going to be involved. I didn't want to ruin my good day on a Friday, which is very common and very easy to do. All right, so I'm interested in what it did when it got up above here. If it also pushed through with a fair value gap that we could have played off of. So here's the 1 minute. We got a fair value gap there, wicked into it multiple times, would have provided a nice entry there. And then dipped all the way back down to here. Holy. So that is this one for ES. If you were playing off that pre-market high right there, you would have got your butt spanked. ES was clearly the driver there. Clearly the driver. All right, so beautiful week. Beautiful algorithmic price delivery. We can start getting rid of some of this stuff now. October low has been taken. It may come back into play. Not sure. I've been marking the opens, new day opening gaps and whatnot, just to see if they're pertinent. I think it's one of those situations, if you get enough lines on the chart, you're eventually going to hit one of them. That one's not really important anymore. We're gonna redo all of those. The levels I don't want to take off because I took so much time to get every, you know, the low and the price and all that. I don't want to take those off. 75% of the week, 50% of the week, in dog, 25% of last week, the low of last week. I think this is our target. These relative equal highs on Monday, that's going to be our upper target. So we're not going to leave those. So I think we'll probably come up and take those somewhere in the overnight or London, make it look like we're going back up to probably that 50% level. I'm just going to have to mark that right back out. But I need to move it because it's going to be the entire week now. And we take those, and then we're going to start offering down into this area here. And if we have a normal week on a holiday week, we may not. They may go back to their manual manipulation where we stay in a big range. Just hard to tell. In dog, I don't know that that's important right now. We'll leave it off. 75% of last week, that's got to go. Yeah, those don't really matter. I can leave them on. But this is definitely going to be the new high, and it's going to be relative equal. 4-hour RTH. So yeah, that's our upper target for continued pullback right there. 4-hour RTH. And I can just clone that one. And we can put one here for our 4-hour low. Make it red. And clone it for our other 4-hour low. This October low was a really important level. So ranging right here in this area could possibly happen before we push on down. But I do believe we're pushing down. I don't know how many times I've said that this month, and only to see it go up or up and up. But I knew it was coming eventually. Those levels were too sweet. They had to be taken. All right, so that's really all the stuff we need to mark because of this giant candle here. We could possibly move that one up to there, but I don't think it's necessary. We can see that one there. Okay, so yeah, those are our two levels of great importance on the NQ. We could open and push down and take this one and then go up, take that one and then fall back down, go up and take that one and then start offering lower. I'm not sure how it's going to happen, but we're going to take one of those levels, and I'm not going to be looking for a trade until one of them gets taken. I did real good about sticking to my goals last week, even watching that 1,200 point move. The entire thing I watched, and I did not get involved. And I probably should have on that one, but you never know. I've been getting ripped trying to join moves in progress for 8 weeks. So no, I left it alone. I got $200 out of it, killed the trade. Really should not have killed the trade. If I would have just left the trade on and said, well, let's just see what it does in the next candle, I would have been fine. I would have had a $4,000 day, about 48. No, I would not have held it all the way to 1,200. I might have. Once it got down here, I might have been like this, but I think I probably would have killed it at settlement, which would have been $1,000 on 2 accounts. So $2,000 day would have been nice. But I didn't do it. Can't cry over spilt milk. All right, so these levels are really important. Make sure you get them on your chart. 23,266, 23016 NQ. We need to mark settlement over here as well while we got it pulled up. And I like to change to a smaller time frame to get settlement exactly right. So a 1 minute or 5 minute will usually do the trick. That moved my line way over here, right there. Sometimes it can be off by 20-30 points on the 4 hour. Today it was not that much. So yeah, right there, that's our settlement price. Now, I'll just give you that example. We go back to the 4 hour, see we're above the line by only 4 points. Sometimes that can be 20-30 points, and you don't want to be that far off. So go that smaller time frame for that. And it just marks the 3:15 candle close. That's what I use as settlement. It usually works pretty good. Get you within a point or two. Right, I've got those marked out. I think that's good for the, oh, we need one more thing. We need the weekly chart. We did take that low, very significant level, work through this fair value gap right here. That may be all the low we want. We may start Santa Claus rally and start heading back up. But I really think these have to be addressed. Really, really do. So on the weekly chart, we can use this entire candle now as our weekly range. And we're just going to put a fib tool on it and just mark it out like that right there. Don't have to be that far out. ES already pulled back to there, but it was not the entire weekly range. It was just Monday through Thursday range. And it already pulled back to there. So where we're sitting right here for the entire week, just a little bit above 25% pullback. We may go back up to here. That would be beautiful with the 4 hour regular trading hour resting right below it, around the 50%, and then adios. Or we may just push on up, and this is the low that we wanted for the remainder of the year, and we're going to the moon. But I'm going to be watching that level right there very closely. Put it on your chart, mark it out. 24,637. 24,637. If we got a reversal signal anywhere around this blue line and that level, I would be in and I would be holding until I heard cows start to moo. In Texas we call that until the cows come home. So now let's doctor up our ES chart. We'll be ready for Monday. First thing I need to do is get rid of some of these things. I can just move that one. I know that's going to be our afternoon high. All right. I think I got it cleaned up pretty well. Get rid of that one. So 4 hour, regular trading hour. Let's mark some levels here. We got that one's low is not very far. We'll just clone this guy just like we did over there. And we'll make him red. Clone it again. And move it all the way down to, these are kind of relative equals, aren't they? Which one do we pick? I'm going to pick the lowest one. Yeah, we'll pick that one. That is regular trading. No, that's extended. That's extended. We got to get out of that. Regular trading. All right, now we got something we can work with. So I don't know that I need to put RTH there right next to monthly. I'll just, I mean, we took it by a lousy tick. Maybe I'll just add to this one. I don't know what I'll do. We need to know that it took that by a tick, but maybe we can just know it and we don't need it there. That's what I'll do. Get rid of it. Just know it. We could revisit this level right here. Now my settlement needs to be moved. There we go. And kind of ambiguous because ES did take its high, NQ didn't. NQ could be the driver on Monday and go take that high and then fall out of bed. We just don't know what's going to happen there. So there's our 4 hour levels. Up here, ES did not take its highs. Maybe ES is the driver and we go up here and we take those highs. Work into this fair value gap here. That would be against the seasonal tendency, but maybe Santa Claus rally starts early. Just have to keep an open mind. You can see here on that 1 minute chart here, it's 24 and that one's 26, so a couple of points off, but not bad. That's what I was talking about earlier. So weekly, we need our weekly levels for our retrace potential. I've got to get to a weekly chart first. High of the week, low of the week. Make sure I'm at the high and the low, and we don't need it to be gigantic. There we go. You can change the color of these if you want to something besides the high and the low, if it helps. So like 25%, instead of it being that blue, maybe we make it like an orange hue. Is that too close to yellow? Maybe we make it over here. And then 75%, because it's really, it doesn't matter. It doesn't have to be a new color. I mean, the 75% doesn't really matter. It's just 25% of that quadrant. Is that the same one? Is it that one? I think it's that one. All right, that'll work. And now we can, when we get to the lines, if we can't see these numbers, we'll know, okay, well, that's 50. And that's just 25%. It's just important to get those on there. Now, the regular trading hour high here is actually a little bit higher than the 50% mark for the week. So we could come up, trade up, take both of those, and then fall out of bed just like over here. It's below. So I think that area is a target for our pullback. Either we go to it and fall, or we fall and go to it. But that's an area we need to pay attention to. ES could leave that high. 6664.50. I think that's it, guys. I mean, these levels haven't changed. I did notice on the monthly chart we have a really nice PD array that we could trade into. I've got the weekly fair value gap marked here, but look at the monthly. There's two of them. This was our tariff sell-off, and we've been going straight freaking up ever since. That's the monthly. The weekly, we did have a little bit of pullbacks, but not really taking many lows. We took those, but left that one. That right there to me just says, I mean, if I'm looking at a 1 minute chart and I'm trying to figure out where price is going next, I'm waiting for this breaker right here to validate, or at least price to start closing below that. And we're having lower closes. We just need to get one closing below there, and then definitely going there. So maybe this week just takes out that bottom with a close just a little bit below this. That would be wonderful, because that, to me, if we're pulling back, that's the place right there. On a monthly chart, you can't really tell, other than maybe we go to the fair value gap. Yeah, if I saw that on a 1 minute chart, I would think we would be pulling back to either here or here, and then going back up. I don't think we would wick all the way down into here, but that is an interesting feature. Look at this, two fair value gaps. When we traded down, what did we trade into? Monthly chart now behaves the same way as the 1 minute chart. Look at that. Random, just a random place to stop after the tariff news. We just randomly came in, painted that buy side, left this one indicating we got more bullish to the guys in the know, and then straight back up. Coincidence? I mean, if the tariff news was just the most horrible thing that the market has ever seen, why did we stop right there? The market is freaking rigged. And we're learning how they got it rigged. And we're going to get rich, all of us. On the weekly chart, this actually, I think it was a little bit more of a, yeah, it just filled that one in on the weekly. Filled it in, actually took out that low. Adios Paya. Respected with candle body. Daily, it respected it with candle bodies. That's funny. 4 hour. Almost got to the center with candle bodies on the 4 hour. How is that? Oh, it's 4 hour regular trading hour. So it didn't even poke below it on the regular trading hours. It just respected it. Very interesting how things just move to those inefficiencies, move to those at fair value gaps, and then go the other way. Just like we did here on the downside. We moved to that daily fair value gap, and then we went the other way. Let's see where that one is. That's right there. No fair value gaps yet. Daily. We have 2 on the daily. 1 here, wicked into it, came down. Another one here. No, that's not it. Did it close in? No, I thought this one was one. That's the one that we were wicking into, but they had. Oh, I'm on. No, I'm still regular trading hours. This is ES. This is ES. So ES just has 1. NQ is the one that has 2. Okay, so they have this RTH gap, and it's also a daily fair value gap right there. And followed by another daily fair value gap to the downside. Wicked into it twice. Now we're pushing lower. If you saw that on a 1 minute chart, you may say, well, we just took these lows. We might offer higher. We may come and take out some of these inefficiencies. Maybe this one we take out. Maybe we wick into it again. But we didn't reach it that time. Price could go either way. It really could, just based on that. But if I'm looking at a 1 minute chart and we've done a giant run, taken out what the blue sky and the all-time high, and then started offering lower with fair value gaps, I'm selling. I'm waiting for a pullback here, and I'm selling short on a 1 minute chart. And then we can treat the daily chart the same way. Where might we pull back to? That 50% of this candle right here. That might be the better 50% to work with. That's what we did on Friday, was basically the 50% of that candle, because that was nearly the whole weekly range right there. I'll leave it as it is, but it might be worth noting the 50% of that. And that's where, I think that's where ES pretty much stopped. It went a little higher. Let's put it. If the algorithm was told to take back 50% of Thursday's move, that's what it did. Basically 50% of the weekly range, it took back 50% of the Thursday move. Did NQ get told to do the same thing? Oh man, that's the weekly range. Maybe Thursday is the day we should be keying off of. It's not that much different, but I'm just wondering if NQ went to that. No, it left it. So this level right here, I don't know why that's on there. Let's get rid of it. This level right here may be where we're headed there. 24,691. Instead of half the week, we may go half of this day, since that was the majority of the week. 24,691, so 24,7 we'll say. And over here, just the day only, we already kind of hit it. So we could still use those same levels. We could use that 4-hour RTH. 6679. Yeah, I think those are pretty good hypos for the week. My levels are good, I know that. I don't always take advantage of the trade that gets to that level. I bad entry, whatever, or miss the trade. But I am very encouraged by the fact, and I've been doing this for a while now, um, calling out on live levels that the market might trade to, and then it trades to them. It's a confidence booster. And I learned it all from ICT. It's not my stuff. But I didn't want to have to go and watch one of his videos every time I needed to take a trade. So I just decided I'm going to learn what he knows. And then I'm going to put it on the chart and see if I can start identifying those levels myself. And I feel like I'm getting there. I do feel like I'm getting there. So I think that's it, guys. Those are the important levels for the week. Get them marked. You notice the daily is different than the 4-hour regular trading hour, but that's regular trading hour is the money. It's the money. We can go to a regular trading hour low and leave the daily low untouched. So here's our daily. Look at the 4-hour RTH. Didn't even bother with the daily low. Just wanted that 4-hour RTH and this monthly right back up. Mucho importante. Make sure you mark those 4-hour regular trading hour highs and lows. All right, I'm calling it. I think I'm going to go back to bed a while, or go run around the block. Y'all have a wonderful morning, wonderful weekend. See ya. I might trade Asia on Sunday night. I'm not sure yet. If I do, you'll see me on the live. Have a good weekend.